Welcome to this week's trading podcast. It's Cam Buchanan here from IDTA. Now, what we're going to do this week is we're going to review last week because there were some interesting events that occurred last week that we want to go through. Very important that we go through the review before we get into what's happening this week. We'll also talk about upcoming news for this week as well, so you can best prepare for that. And then we'll dive into the charts and do some analysis and do some review on what happened and what could happen this week as well. So let's get into it, shall we? So first of all, last week was interesting in terms of news. Let me bring up Forex Factory and we'll run through the main news that went through. So the first things first, it's not in the Forex Factory site, but China was probably a big news story. They look like they increased their money supply to really stimulate the economy. Their stock market had a huge boom, and I think the American stock market also was appreciative of that and followed lead in that respect as well. So that was something, a bit of an unknown that a lot of people may not have known about that occurred. But if you look at the Chinese 50 index, it was on the bottom and it is done a massive rally. Like, I don't know the actual size of the rally, but if you can find a Chinese 50 index chart, the top 50 stocks in China, the index absolutely boomed last week. It hasn't hit all-time highs yet, but it did a massive recovery. I think Friday was a really interesting day because we came out with some huge news in terms of the non-farm employment change. If you look here, what they were expecting was 147,000 new jobs created. We got 254,000. So, almost 100,000, over 100,000 more jobs created in September. Obviously, the interest rates may have something to do with that. But it was a huge news announcement, and the market rallied massively on Friday. It looked very weak in the open. In the trading room, we got some really good shorts early, and then the market just recovered and rallied very strongly into the afternoon. And I think we may have tested. We'll go and check out the charts, but I think we tested 5,800, which is a really significant level in the market on the S&P 500. But overall, the news is very positive out of the US. And what else was positive was the PMI number was up. That was another important number. And then job openings was also high as well. The ISM PMI was probably the only number which was down. It was slightly down. So Friday very much rallied strongly after a fairly flat, if not, it started to look bearish at the start of the week, but then it sort of balanced out. So market's still a little bit uncertain when we get into the charts, but we'll go a bit more detail there. What do we got coming up this week? We've got CPI is the main announcement coming out Thursday night at 11:30. So that'll be just on the open of the market. And then we've also got core PPI coming out on Friday at 11:30 as well. So looks like those news announcements are typically 10:30, but it looks like they've changed now. They're coming out an hour later. You know why? It's not. It's 11:30 if you're in New South Wales and Victoria, 10:30 still in Queensland. It's just my clock is set to daylight saving for some reason. So always a very confusing time, daylight saving. Anyway, so that's it in terms of news. Let's have a look at the chart. So let's look at the S&P 500. So last week we were looking at this trend line break, and that occurred. And then so that occurred on Tuesday. Then Wednesday, Thursday, the market got out of balance. See, that was the balance bar there. I'll just change this to this tool here. Oh, wrong one. Yeah, so you can see that was the balance. The market was stuck in for 3 days. Then we broke out of it and we held underneath it. Now, I was thinking this market was going to be very, very bearish, particularly because we opened quite low, but then the market just recovered amazingly well. And we tested that 5,000 800 mark again, which is right there. So we've tested 5,800. So that's a key level of resistance at the moment, because we can see on Monday we had a very big outside engulfing candle type day. Didn't close outside the low, but it was an outside candle. And we've actually, you can see I've created this little balance bar here. All right, so I've got this now creating the balance, because we've basically got a 2-day balance. So Friday and Monday. Monday was very lively, big market movement. And now this is where we are trading today. So once again, I'd be looking for balance rules applying here. I'd be watching also this market can hold under this trend line. So we've got 5,800 as a key resistance level. Looking, we can hold under this trend line. And then once again, if we can break these lows down here around about 5,725, we've got some imbalance down to the low side that the market may want to fill. So we'll see what happens. Once again, it's very strange at the moment, because if I'll show you the bond market, because the bond market is something which is a good indicator of what's really going on. A lot of smart money or safe money goes into the bond market. So typically, so you understand how bonds work, if the bond price is dropping, it means the yield is increasing. So that's the money you can return on these bonds, right? So with the bond price dropping, yields are increasing. So it looks like a fair amount of money is going into the bonds at the moment. And you can see last week the market dropped off. So typically, if money's going into the bonds, money's coming out of, well, the bond price is dropping, it looks like more money is going into the stock market, and that's what happened last week. But also smart money is seeing that there's a really good opportunity for yields here on the bonds. So it'll be interesting to see what happens here, because this is something I'd be watching. You can trade the bonds if you're interested in that. There is a micro or an ultra. It's called the ultra 10-year bond. Typically, the bond market, the original bond market was called the ZN. It's got about a $32 USD tick. It's a very slow moving market. Doesn't move a lot. Doesn't have a big range like the US indexes. But if you want to get in with lower leverage, you can check out the TN. Is a way you can trade this, or you can trade the 10-year, which is the interest rate. So the 10-year, if I bring up the 10-year here, you can see the 10-year is actually increasing in value. So the 10-year, this is the yield, right? So this will be inverse to the bond. All right. So there's a couple of ways you can trade the government bonds, treasuries. You can either trade the yield, all right, which is called the 10-year, all right, which is this one here. So you can see the yields increasing. It's up to 4% yield. And then the bond is decreasing. So remember, if the bond price is decreasing, the yield is increasing. It's a little bit confusing, but this is one to look at, because if the interest rate's increasing, it just means that there could be more money coming in to take advantage of this safe return, because, you know, a 4% return is very conservative, and typically money will go into bonds when the market is a little bit uncertain or scary. It's a bit of a safe place because big money gets a guaranteed return, whereas when the stock market, when more money is pouring into the stock markets, it means it's more speculative. So it's very confused at the moment. I think coming into this election time where there's a lot of it's so strange. Like the media are all pumping up that, you know, it's a neck and neck race, or the Democrats are slightly ahead. I was just speaking to a friend in America this morning, and he was saying that it's like everywhere you go, there's Trump flags everywhere, and there's so much information on Trump. So we don't know whether we're getting the correct news or what these polls are like. But, you know, who knows that I'm not going to get into conspiracy theories, but a lot of people think the elections are rigged anyway. So, what people's votes are going to be maybe doesn't matter, but who knows? I do not know, but all we can do is follow the charts, and the charts are showing one thing. Particularly the bonds are showing us that there's more money coming into there's good interest rates that you can get into the bonds. So that bond price is dropping. So there seems to be demand for bonds, and that can be a sign of conservative trading. So if you see a demand for bonds, then maybe the stock markets might drop. So that could be an early warning sign that the stock markets may fall in the short term. But anyway, we don't want to over speculate because on a long-term scenario, because all we're really concerned about is what's happening day to day in the markets. And if we look at what happened, trading for us is very much a short-term perspective. I think that's the most important thing. We got to deal with. I was hearing a commentator say this morning, you got to deal with current business first. And it's so true. Like sometimes we can get so caught up, or I know I get so caught up in the future that I forget about what's happening in the now, right now, in the moment. And as a day trader, that's really all that matters. So if we look at this 30-minute chart, if we just do some quick analysis, if I just run another profile just over the, if I just use the IDTA profile and just run it over I'll run it over that news candle there. I'll run it over the open. Yeah, there we go. So this is a great example of, being in the moment, right? Because you would think we saw this big sell-off down through here and we saw massive volume coming into the markets. And we're thinking, okay, we're going to see more of a sell-off, right? But I was expecting the market to go down and test the low. That's ideally what I'd like to have seen, but we had an incredible opposite reaction. And what the profile shows us is that how value was increasing. Basically, what value means is this. So this was the prior day, right? This is the US cash market. So that was the value area, that darker blue section there, right? So when the market opened on Friday, the market sold off heavily and it showed some real strong strength. And then we thought this market's going to just tank and continue. And we got some really nice trades right down early. But then look at this recovery and look where the market got to. If we just expand this value area out, the market managed to fail for basically 2 hours, right? This is a 30-minute chart. The market failed here for 2 hours at the value area high. So, which was meaning that the market couldn't get back into yesterday's or the prior day's value area. So we weren't seeing lowering values at all. Values, in fact, were increasing. And look at Friday. Friday then spiked high, and then we tested 5,800, and we finally filled this imbalance zone here, which was we tried to fill on the morning of the US cash market in the pre-market, and then it filled it in the afternoon, or tried to. And then Monday's Asia session filled it, and then we've sold off down through here. So now if we look at value, what value is doing now in the US cash market, I'm not looking at overall. I'm just looking at the value area just from the US cash market. If I run from there to there, and you can see here, look where the value is. Even though the market went down, the value is, if you look at the dark blue section, the value is still balanced. It's still balanced compared to Friday. So we're still sitting in the mean here. So if you're trading the ES or the MES, I'd be watching to see if value is maintaining balanced. So if the market can get back up into this area here and find some balance, all right, or if it can't, then we could be setting up some lower values. You can see in Asia already we've tested the value area low and we've bounced off it. So in Asia trade, value is looking like it is going lower, but we'll see what happens when Euro and obviously US come in to trade today, being Tuesday, see what they want to do. All right, but we have our CPI news and our PPI news later in the week, so Thursday, Friday. So market may stay balanced this week until until that news comes out. But I'd be watching, if you're using the IDTA volume profile, just run that over I run it over the cash market. I run it over the US cash market primarily because that's where the majority of volume is traded. The overnight session, which is Asia and Europe, is generally very light. So it's about maybe 15% of the volume is traded in that time, whereas 85% of the overall volume is traded in here. And that's really, in terms of value, you've got to look at what the volume is doing. That this is an important aspect to look at. So longer term, if we see changes in this value, that's obviously the direction you want to be ultimately trading in. Anyway, I thought that would be helpful for you guys to understand a little bit about not just price action, but also the value. Let's look at the NQ, NASDAQ, which is one of our most popular markets we trade. You can see we're still stuck in this Tuesday's balanced range here. So that was Friday's move up, was threatening to go up higher, and then Monday we sold off a little bit. So we've basically got this outside bar that is creating the balance, and then you can see the market is still sort of stuck between the 90%, 76 and the 23. So very tight, balanced trading in this market. What other markets were exciting to look at last week? I think oil was interesting as well. We had the OPEC meetings last week, and oil has definitely rallied from those OPEC meetings, like all last week. Oil is massive, huge run. You can see we've butted heads up against this descending trend line here. So we hit $78. Considering we're down at $64 only 3 weeks ago, we've seen a huge recovery in the oil price. So obviously OPEC is obviously reducing supply there, and and obviously what's happening in Iran and the Middle East is obviously having an effect on the oil price. So very bullish movement, but technically we've still got this resistance trend line to break through for oil. Another market which has been interesting as well, gold and silver have been very popular in the media. We can see gold is in some balance now. You can see we're trading between the 76 fib and the 23 fib. So we're in a contracting range at the moment on this chart. And Bitcoin as well. Bitcoin's seen a lot of movement over the last couple of weeks. Last week was interesting. We did sell out. We did sell down. We failed at this trend line that we've been using has been a very strong level to trade off. We're finding a bit of rotation now around the trend line. So we didn't get a huge bounce off the trend line. The market has come back and tested that trend line. So Bitcoin's is still gearing up for a breakout, it seems. But it's got to show strength above this level, because so many times it's threatened to hold above that trend line and keeps failing. So we've got another attempt here. If it fails up here, I'd be looking for short time shorts. But if it can get above, then I'd be looking for longs. And then if it can hold above that level, then Bitcoin could be really moving to the upside, which there's a lot of prediction that Bitcoin will move higher. But once again, it could be a lot of media hype, which you don't want to get too caught up in. So guys, that pretty much concludes this week's wrap. Just remember, the main thing is, I think we're going to see some balanced trading this week. Thursday and Friday, we have the news coming out. We are expecting a turn in the markets around about the 8th of October. So today there's a turning date in the astrology calendar, trading calendar. So watch out for a potential turn in the markets. But and also have a look at the bond market if you get a chance, and the interest rates. All right. So you've got the 10-year interest rate, and then you've got the TN or the ZN, which are the 10-year bonds. Have a look at those. Remember, they're inversely correlated. So the 10-year yield or 10-year interest rate is currently rising at the moment, and the bonds are actually coming down in price. So if bonds are coming down, it means there's a lot more interest in those bond markets, and that could be a safe haven for the economy, particularly for traders coming into the election. There could be a lot of uncertainty and a lot of volatility, and people are looking maybe for a safe haven at the moment. But it's very confusing, because if you look at all that money that China printed last week, and you look at the Chinese stock market, that was very bullish, and we did get a bit of a bullish reaction from the US stock market as well last week. So there's a little bit of conjecture, but I'd be following those bonds, because the bonds can give you an early warning sign that the stock markets could be coming off as well. So keep an eye on those other markets as well. But have a great week in the markets. Stay safe, and we'll see you very, very soon. And if you want to find out more about what we do, just click on the links down below. We have trading room trials consistently. We've got one on Wednesday morning. So if you're interested in the trading room trial, we're doing a US close trial Wednesday morning at 4 a.m. Queensland time, 5 a.m. if you're in daylight saving areas like New South Wales, Victoria. Thanks, guys. Have a great week trading. Stay safe, and we'll see you next week. Bye for now.